What about now? Friends, can you hear me now? Please confirm. Yes. Wait. Can you hear me now? Please confirm. I'm just waiting. Is it comfortable and clear, all of you? Yes. Excellent. Good evening, everyone. Good evening, Simi. Let me just keep the chat box near to the camera so I can watch it on live. Good evening, Yogini, MMC Media, Swapna, Nivedita, Arvind. Good evening, everyone. I hope now the audio is also clear and the video is also clear, friends. Shall we start off today's session with this, friends? Friends, I'm unable to come every week as of now because my face-to-face classes are going on. Last week I was in Kochi at Logic. Next week I will be again traveling to Thrissur and then I'm coming to Chennai also. So I just request you, be in touch with me. As and when I'm getting a free slot in a week, I will be announcing a date in advance and I will go live. And since these videos are already being recorded, by chance you're unable to attend at that point of time, you can always attend it later on also, friends. All right. First, let me again start with this objective of SFM Success series, friends. Many of you are my students and you must be knowing that in every class, I have a win-win agreement. You should win, I should also win. As a part of this win-win agreement, I want all of us to get through this upcoming examination in November 22. And that is the reason consistently I'm coming live as a part of SFM Success series so that you can score the best in the SFM. So it is as if we both are preparing together for the conceptual areas, the problematic areas, so that your revision can become easy and whatever doubts you have, you can always clear those doubts with me. All right. So friends, I request you to be in touch with me. Either you can subscribe to my Telegram channel. These are the two platforms on which I update about my classes. Telegram channel, you can just search for CA Tarun Jagdish. Okay. And you can just join that channel. I will be announcing over here. Second, you can announce, I normally announce on my WhatsApp on a broadcast. So if any one of you want these updates to happen, in that case, you just have to WhatsApp me on my number. Okay. I will add you to the broadcast and you will get one message that I'm going live on this date, on this time. The broadcast is not to keep on messaging you and wasting your time. I respect your time. Only the important announcement will come and maybe you'll get one message in a month or in a week, not more than that. MMC in Thrissur, I'm coming at ICAI this coming Monday. It's a 5-day, 50-hour crash course. It's actually a hybrid, face-to-face also, online also, friends. So anybody wants to join for online, please WhatsApp me. I will check with ICAI and I'll get you the registration link because it's a face-to-face at the same time, an online 50-hour crash course that's happening on SFM. All right. Now, let's come back to today's topic, friends. Today, I'm going live to share with you some beautiful questions which I feel are very, very good and I feel are important for the upcoming November 22 examination. Maybe today we are doing a 2-hour session, friends, 6 p.m. to 8 p.m. All right. I'll try covering maximum today itself. By chance, I'm unable to cover, I'll be keeping a few more sessions in which I will be covering it thoroughly. Everyone clear? Next one thing is a good news for the students who have already attended my online or my face-to-face classes. I just went through the November 22 SFM RTP. Friends, all the questions in that RTP except for one capital budgeting question is already done in class. Same question, not even the numbers have changed. So if you have already attended my online regular or my my recorded classes or you have attended my face-to-face class, you just brush through the November 22 RTP. You don't have to work it out. You don't need to spend any extra time on that. Only solve that one question on international capital budgeting. Nevertheless, I will be coming live very soon to crack that also. All right. And October mid, around October 12th or 13th, date is not yet announced, not yet confirmed. I will be coming live with a theory marathon. I'll be spending a 5 to 6 hours and covering the entire SFM theory, which will come for 20 marks in the November examination. All right. So please subscribe to my YouTube channel or WhatsApp me on my number or join my Telegram channel so that we can be in touch and I can keep on updating you on such amendments that are coming in the future. Now let's go to the tricky questions, friends. The first one, You are all going to write the exam November 22. Friends, based on the past history, okay, November 2016 was a dangerous exam. November 2020 was also a deadly exam. All right. November 18 was average. I would not say very tough, but it was average. Somehow, this November even numbers, they're making it a little tricky. So, I thought, why don't we do all the tricky questions here itself, so that these questions might have a higher chance of coming in the examination. All right. So, in these, I'll start with the first one. November 2020 paper is something what each and every one of you must work out. And today I'm going to work out a few very important questions of November 2020. All right. There is a one question on convexity. Okay. There is a question on value at risk. And if I'm not wrong, there is one other question on uh, what was it? I think it was yes, it was a question on mutual funds. Three very good question which all of you must work out. Okay. I will do convexity and VAR in the class today. If we get time, we will also do the mutual funds part. I'll start today's question with first one, okay, which is called as constant proportion portfolio insurance policy. Okay, friends, this question was there earlier in the old syllabus. Subsequently, it was removed from the study material, but of late it came in one of the earlier new syllabus examinations. So I find it important to be done in the upcoming exam. This question you can take from my website. You just have to visit my website and come to tarunjagdish.com. Click on notes, SFM notes. Here you can click on, hold on, we are talking about additional questions. All right, in this question number 4. So I'll give you a minute's time. Please read through the question and understand the question, after which we will do it together. Time's up, friends. Shall we do it together? Every question when you present in the exam, you should start with working note number 1, basic data. So I'll start with that. Working note number 1, basic data. Indira has funds of how much available? Funds available is equal to 3 lakhs. Okay. Then they have told she wants to invest in the share market with a rebalancing target after every 10 days to start with for a period of 1 month from now. Okay. What is the present Nifty 5326? 5326, and then the minimum Nifty is 4793.4. 4793.4. She wants to know as to how she should rebalance her portfolio in the following situations, etc. Keeping the theory of constant proportion portfolio insurance policy, and the multiplier is said to be how much? 2. All right, friends. So now tell me, what is the present Nifty? 5326. What is the minimum Nifty? Okay. So what is the fall in the Nifty, or I'll call it as maximum fall in the Nifty? That would be 5326 minus 4793.4. Okay. So 532.6 divided by 532, if you do, there's a maximum fall of 10%. Okay. That is 532.6 divided by 5326. Everybody clear with this part? So if there's a maximum fall of 10%, friends, I'll write down working note number 2 over here. Okay. Amount to be invested. I will first give you the formula here, then I will tell you the logic. The formula goes like this. What is the portfolio value that is available with you? 3 lakhs, correct? What is the minimum, what is the maximum fall that is possible? 10%. So what is the minimum value possible of the portfolio? Assuming that the security replicates the Nifty. Does it turn out to be 2,70,000? Friends, this 2,70,000 is what you call it as a floor value. Please repeat this, friends. I know I cannot see you, but please repeat this terminology, floor value. So friends, based on this, how they find out the amount to be invested is, the formula goes like this: portfolio value minus floor value multiplied by 2. So here it will be 3 lakh minus 2,70,000 multiplied by 2. So you get the answer as how much over here, friends? You get the answer as 60,000, or which means if my total funds available is 3 lakh today, out of this 3 lakhs, I will invest 60,000 in the portfolio, and the remaining 2,40,000 I will invest in RF. Logic is very simple, friends. This policy is basically for those people who doesn't want to take too much risk. Okay, multiplier 1 means minimum risk. That means you'll put only 30,000 in the portfolio, 2,70,000 in RF. Here the portfolio multiplier is 2. So 60 here, 2,40,000 over there. If the multiplier was 3, what will happen? You will take around 90,000 in portfolio. So basically, higher the multiplier, higher the risk the investor is willing to take. Here is willing to take a very limited risk, only 60K in portfolio. Remaining money will go in RF. Can you just write down this in your books? I'll give you a minute. All right, friends, are you all clear with this part? Can I go to the next one now? Okay. So once you get this value, they say this is the starting point. 10 days later, what happens? The Nifty is falling down to 5122.96. So let's just write down over here. Okay. Position after 10 days. Friends, originally you were having 3 lakhs over here, correct? How much value was there in the portfolio? 60,000. How much value was there in the RF? 2 lakh 40,000. Everybody clear with this part? Now what has happened? The Nifty is falling down to 5122.96 from 5326. Okay. So I'll write down percentage fall. Earlier the number was 5326 minus, now it has fallen down to 5122.96 divided by what? 5326. It's fallen from 5326, correct? Do I get a fall of 3.81 percentage, friends? Okay. So if that is the fall, okay, tell me what would be the revised value? 3.8122. I'll get the revised value as 57,712. Correct? This value will remain at how much? 2,40,000. Now tell me what is the total value that you get over here? 2,97,712 is going to be the total value. Now again what we will have to do? We will have to do a rebalancing. Okay. So I will write down rebalancing. Okay. So what was the original value? We have 2,97,712 minus the floor value is 2,70,000 multiplied by 2. Do I get the answer as 55,425 approximately? Okay. So now what will happen? For this 3 lakh, I should change in such a way that here it should become the new value over here should be 55,425 and the RF should be, hold on. It should not be 3 lakh, it should be 2,97,712. That's the new value, right? 2,97,712. This will become 2,42,286. This is supposed to be the new value. But tell me, friends, how much was the old value that you had over here? 57,712. And here it was 2,40,000. Am I right? So let us take the difference. 55,425 minus this will give you 2,287. So here what I have to do, 2,287 I have to sell. Okay, sell, and therefore here if you see it is the same 2287. So sell the money here, and that money you are supposed to invest in RF. That is how the rebalancing takes place. I'll give you a minute's time. Can you please go through this once again, all of you? Confirm that have you understood what I'm doing here? If you want me to re-explain, please let me know. Okay. All right, friends, can I go to the next part now? So the first 10 days are over. After another 10 days, the Nifty goes up to 5539. So now I will write down the next position after another how many days? 10 days. Okay. So friends, first I'll put this 2,97,712 is the value over here. Out of that, how much is kept in the portfolio? 55,425. And how much is kept over there? 2,42,286. Everybody clear so far? But now what has happened? The Nifty has gone up to 5539 from 5122.96. 5122.96 to 5539.04 divided by 5122.96. I get the answer as plus 8.12 percentage. Am I right? The difference from the base, it is gone up, correct? So if it is gone up by this much, okay, so it will be 55,825 plus 8.12 percentage. My new balance over here will be 60,358. This will remain at 2,42,286. If I add up these two things, I'll get the answer as 3,02,644. Everybody clear with this part? Now at this time, again, what will I have? I will have a rebalancing. So how do I do a rebalancing again? Tell me, friends. It will be 3,02,644 minus what? 2,70,000 multiplied by 2. That is turning out to be how much? 65,288. All right. So once you get this number, what does it mean is we have a total of 3,02,644. Inside this, we will have two breakup. 65,288 will come over here, and 2,37,356 will come over here. This is a revised value. Okay. If this is a revised value, how much was the old value, friends? Old value was 60,358, and the other one was 2,42,286. Now I will take the difference. So the difference is 237,356 minus 2,42,286 means 4,930. What will I have to do over here? I will have to withdraw. All right. That same amount I have to come and invest over here. This policy is what we call it as constant proportion portfolio insurance policy. Can you please go through this also, friends? And please confirm and let me know, are you clear with the concept over here? All right, friends. So I think tricky question number 1 is completed. Shall we go to tricky question number 2, friends? All right. Tricky question number 2, I will take a question from December 2021 suggested. You had a very good question on initial margin and maintenance margin. Okay. Concept wise, nothing different. If you have already attended my class, everything is covered. Just that they have one extra addition that is coming over there, which I will be explaining over here. All right. Let me come over here and explain. Okay, let me take that question. Okay, I'll come here. We will take suggested final SFM December 2021. Friends, I'm not going to solve this completely. Okay, we will be just discussing it and completing it. All right. For my regular students, look, all these are covered already. This question we have done in mergers in the name of uh, Mark Limited and Mask Limited. If you look at this mutual fund, exactly the same question we have already done in class. Okay. This question is slightly different. The initial margin, maintenance margin. Let me just take that. This is a question on EVA, economic value added. We have done a same task. This one. Okay, I'll give you a minute's time. Just read through the question, understand the question, after which we will do it together. Please keep on replying to me, okay, for confirming that you are also there live, understanding and attending it. Okay, just read through it. To this one question that we have already done in my class, I'll just show you that question. In the chapter of futures, if we have done a question, not this one, Sensex mystery, okay, how the whole Sensex works. Look at this data. We have done this question in class. But here they have a slightly different point. So that is what I want to show you over here, friends. So what I'll do is I'll put the basic data first. Working note number 1, basic data. So here they have told Mr. R has taken 2 long position on 2 lots of Nifty future. So what is the value of Nifty future over here? It is turning out to be 17,300, right? Okay, and one lot is how many units? 50 units. This fellow has taken 2 lots. Okay, so total value of 2 lots will be 17,300 into 50 units into 2. I think you get the answer as 17 lakh 30,000 will be the total value. All right. But of this, initial margin is only 10%. So initial margin is going to be 10%, and they have told maintenance margin 80%. So how much is 10% going to be? 17.30 lakhs into 10% is equal to 1,73,000, right? Maintenance margin is going to be 80% into 1,73,000. Hold on, 1,73,000 into 80%. I think you'll get the value as 1,38,400. Okay, 1 minute, go through this. If you're clear, I'll go to the next part. All right, friends, I believe you're clear with this. So now what we have to do is they have told in the question that the price are going on changing like this. So when the price keeps on changing, automatically what will happen, friends? The value will also change. I'll try copying this. I'm not sure if I can copy, and I'll post it in an Excel sheet. Just a moment. One moment, friends. Oh, something wrong with the Excel. I'm unable to, I think, open it. Fine, then leave it. I'll do it in the PPT itself. All right. Okay. It's fine now. It's come. Let me see if I can copy the data. No, I doubt I can copy it from there. All right, I'll just put the data then. 1, 2, 3, 6, 7, right? 1, 2, 3, 6, 7. These are the dates that are mentioned over there. And what are the values? 17,340, 17,340, 17,180. All right, then 16,990, then 16,900, and then 17,120. Right? Okay, these are the values that you get over here. I'll talk about this as the closing value. All right, and this is the date. Correct? All right. After this, what I can do is I can put the margin, okay, or I can put the gain or loss. So basically, what happens is here, what will be the formula for gain or loss? Whatever is the closing value minus whatever is the opening value. So this is going to be the loss. Am I right? Okay. This is a loss for one particular unit. But are we entering into only one unit? No, we are entering into 2 lots. So I'll write down over here gain or loss for 2 lots. Here I'll call it as gain or loss. Okay. So if you're talking about 2 lots, this multiplied by 2 multiplied by 50. Your total loss will become how much, friends? 16,000. Let me just confirm that number. I just go down and just cross check. Hold on. Have I taken? Wait. I have not put the margin over here. Margin balance I haven't put. I'll put the margin balance over here. How much is the margin balance? You have 1,73,000. So here the formula would be this plus this. So it should be 1,57,000. Hold on. 17,340 minus 17,300. Hold on. I think the first day balance is 17,300. I think I missed out that part. Give me a moment, friends. Okay, the first day value I have missed out over here. The initial day we'll talk about 17,300. On that day, the margin is turning out to be 1,73,000. Okay. So here also the gain will come, gain or loss will come. You have a 40 rupees gain. Okay. And here the formula would be the same formula what I have put over there. So you make a 4,000 loss and the formula here would be this plus this 1,77,000. Let's go and cross check. Yes, you get 1,77,000. Okay. Then you get 1,61,000. Yes, rest are all in place. So now I just have to bring it down and bring this also down. Okay. And here what I have to do is I have to copy down the whole thing. Okay. Now tell me, friends, how much was the maintenance margin that I told you over here? 1,38,400. So friends, until here things are okay. Until 1,42,000 things are okay. After this 1,42,000, next day the margin falls below the maintenance margin of 1,38,400. So the moment that happens, what are we supposed to do? We are supposed to recharge this thing back. So I'll give something called as call money. Okay. Here I should bring some money so that the entire thing should go back to how much? 1,73,000. So how much money I should bring in? 40,000. And the formula would be this plus whatever is the money I'm bringing into the picture. So 1,73,000 and the closing value will become 1,95,000. See, haven't we got the same answer that they have got over here? Hi Ashish. Yes. A world traveler, is there a confusion in the previous question? Is there some mistake that I have done while I added it up? 55,430 plus 8.12%. Okay, is there some calculation mistake? I'll correct that part. Let me complete this one first. I think there is a calculation error that has come there. We will go and check that and clear that up. Not a problem at all. Now here, are you getting the number as 1 lakh? Hold on, I'll take the Excel. Are you clear with this entire table that we have drawn over here? Okay. So here if you see, as the value goes on increasing, your margin balance keeps on increasing. As the value goes on decreasing, your margin goes on decreasing. But whatever happens, your margin should not fall below the maintenance margin. And how much is the maintenance margin, friends? It is turning out to be 1,38,400. So the moment it falls below 1,38,400, you bring in extra how much money over here? You bring in extra 40,000. I'll give you a minute. Please understand this part. I think the previous question I've done some calculating mistake. We will go there and correct it after we complete this problem. All right. Okay. Are you all clear so far, friends? Okay. So now, in order to find out the gain or loss, what we will do is, okay, we will take the closing value. Now tell me, how much is the closing value? 1,95,000. What is the opening value that they are having over here? 1,73,000. Correct. So when you take closing minus opening, what is the gain? Let's check. 22,000. Okay. But for this, you have brought some call money. That is your expenditure now. How much is the call money you have brought in? 40. So what is the net loss that you are making over here? The net loss will be 22,000 minus 40,000. You get a loss of 18,000. Are you all clear with this part? I'll give you one moment. Just absorb this whole data. After that, we will go to the next part of the same question, the second requirement. I believe you are clear with this part, friends. Okay. So that's what they have done over here. See, they have taken ending margin 195, initial margin 173. You make a profit less margin called net loss. This one part, we haven't done it in my class. That is the reason I'm doing this question over here. So this is a little twist compared to whatever I have done so that everybody gets a grip on it. Second part of the same question, they are going for a short position. Friends, what do you mean by a short position? Now they are going to sell. In the earlier one, what were they doing? They were buying. So friends, when you sell, everything will change. You sell at 17,300 and then you buy at 17,340. So in that case, are you going to make a gain or are you going to make a loss? So the formula will slightly change over here. Instead of giving the formula as B3 minus B2, I will give the formula as B2 minus B3. That becomes minus, and I'll just pull this formula down. All right. If you look at this now, 1,73,000. All right. Then it comes to 1,69,000, 1,85,000, 2,04,000. Here 40,000 is not required. 2,13,000, 1,91,000. Value never goes down below the maintenance margin. Okay. So now if you see, closing value is again the same. Hold on. Closing value is the same, no change. Opening value also the same, but the call money becomes zero. Hence, your loss becomes a profit. You make a profit of how much? 18,000. So, friends, this is a beautiful question in which they have done the same thing with a short selling also, and they have done the same thing with a long position also. This is how the margins are generally calculated. Friends, let me give you a small practical angle to this. I'll just go and open my Zerodha account so I can show you. Hold on, friends. All right. All right, friends. This is basically a Zerodha trading account, which I normally use it in my classes so that students can understand the practical side of this. So, friends, now for example, uh, here what I'll do is I just put a 10,000 rupees and we do some investments based on the advices that my students give me. Some of the advices have gone wrong, so I've made losses. Some advices have been right. I've made some good profits on that also. Thank you to those who have helped me make profit, and good luck to those next time so that you can help me to make more profits whenever, with a better advice. Now here I'll show you a simple future. Let us take TCS future. Do you see TCS September future? The moment I click on buy, see what happens is TCS, it is trading in a lot of 150. That means minimum 150 units of TCS we are supposed to buy. And the price is right now how much? 2,988. If you take 2,988 into 150, total value or the contract size is 4,48,200. Okay. For a 4 lakh rupees of trading, I need to put some margin. That margin is what you can see down. See, here you can see the margin as 97,000. So on an average, 20 to 30% of the investment value will be your practical margin. And this margin, as and when the price falls, keeps on changing. That calculation is what we are doing over here, friends. This is the practical side of margin. I hope everybody is clear with this part now. Okay. Now, I'll just go to the previous question, friends. I think I made a calculating mistake. 55,425 plus 8.12 is 59,925. I have taken 60,325. Sorry, friends. I don't know how I got that number in my calculator. There will be a slight difference in the whole answer then. 59,925. I'll just correct it over here. 59,925. This one will remain at 2,42,286. Total will be 3,02,211. Okay. So when I go to the next page, 3,02,211. So the number will slightly change here also. Okay, I'll clear this whole thing. I'll just do it again. Rebalancing. 3,02,211 minus 2,70,000 multiplied by 2. That is 64,423. All right. So once you get this 3,02,211, okay, the new value should be 64,423, and and the other one would be 2,37,787. All right. Whatever is the old value, we'll reduce. That is 59,925. And here it is how much? 2,42,286. Okay. The difference would be from the earlier value of 59,900, it has gone up. So 4,498. Around 4,500 I should invest over here by withdrawing over here. I hope everybody is clear with this part now. That was a slight arithmetic mistake, so ignore that part, friends. Exam point of view also, friends, slight calculation mistakes will cost you half mark or 1 mark. Conceptual issues is what you should focus more on. But thanks for correcting me here. I think some 2,000 rupees went up because of that small calculating error. Thank you so much, World Traveler, for correcting me over there. Okay. So I believe we are done with the question on initial margin, maintenance margin also. Is everybody clear with this part? Just go through this once. If you have any doubts, you can message me now. All right, friends, I believe you are done with this. So if you are done with this part, I'll go to the next one now. That will be a November 2020 suggested. In this, friends, there is a concept of convexity, all right, which they have explained. So let us take that question and do that first. Yes, convexity of the bond. Please read through this question and understand the question, friends. Friends, these are questions which I haven't done in my regular online classes, friends. So if any of your friends are not attending, please share the videos with them, okay? And one more thing I completely forgot to tell you. Friends, in my app, I have now made a new batch, study material theory and practical question. Here, friends, if you go to the video, all the study material chapters, important ones are done, and from study material the videos are uploaded. For example, international finance, if you click, the questions which I haven't done in the class, okay, like question 1 onwards, there are a few questions I haven't done. Question 12 onwards, a few I haven't done. 33 onwards, those questions I have solved it over here. So this will be maybe a 10-hour IFM alone, but all the other questions of study material are covered. Same way, friends, if you want to check any other chapter, like you want to check, let us say, portfolio management or interest rate derivatives, click here. Okay, there are no videos which has come here. I'll check that. Or you can click on portfolio management. Wait, portfolio. Here all the questions pertaining to portfolio are coming. Not only this, if you click on study material, I have added the PPT, theory PPT. All right. This is basically short notes of the entire PPT of your textbook. 170 slides are there. And I have made some notes on top of this also, which when I take class, I give examples, etc. So this PPT is basically in this 170 slides, you will be covering the entire theory of your study material also. Okay. Anima, your doubt is how many decimals we need to use in the exam. 2 is enough, Anima. Normally 2 is enough. Unless the question is coming in some 4 or 5 decimals, otherwise 2 is enough. I believe everybody is clear so far. Can I go to the next one now? Okay. Let's do this question now. Please read through this. Friends, wait. Sorry, friends, hold on. You're not able to hear me. I'll just correct that part. Fine. Can you hear me now? Sorry. I think you can hear me now. You can hear me now. I'll wait for you to reply and confirm. Yes, I believe you can hear me now, friends. All right. So you get the price as how much? 8,648. I'll give you a minute's time. Can you write down this in your books now? Audio is back, right? Sorry, friends, I missed that out. Please write down this in your books now. Friends, is the discount factor correct? Please cross check. Wait, there is some calculation error over here, friends. Please cross check if I have done it correctly. I think there's some mistake with the discount factor. Here, the discount factor is wrong, friends. It is supposed to be. Wait. Friends, the discount factor has been taken incorrect. Okay, the discount factor is wrong, friend. It should be 3.79. I'm using a new calculator, so there has been an error in the discount factor. Please help me with that. It's 3.79. Correct? 3.79. So do you get the answer as 3,221.5 plus 6,200? So do you get the answer as 9,421? Correct? All right. Please write down till here. I'll slow down a little bit. Please write it down. Then I'll go to the next part. Fine, friends. I believe you're all done writing this. So once you get this answer, second thing they're asking you to go and find out the duration, Macaulay's duration. So what we do in the duration, friends, we'll write here cash flow, discount factor, discounted cash flow, weight, and based on weight, what are we supposed to do? We are supposed to find out the weighted average duration. All right, total year 1, 2, 3, 4, 5. Okay, so year 1, 2, 3, 4, 5, you'll have 850, again 850, 850, 850. Last year will be 10,850. Now I'll use a discount factor 0.909, 0.826, 0.752, 0.6 something, 683, and the next year will be 0.620, right? So based on this, we can do what? We can go and find out the duration. First one will be 772.65, 702.1, 639.2, 580.55, 6727. All right. When you take the total will be 9521.5 itself will be the total. Now I should do what? I should take the weight. All right, this into 772.65. That will give you a weight of around 8.2%. Correct? 702.1, 7.4%. Okay, next one will be 6.8%. Then you have 6.2%. Then you have 71.4%. Friends, when you do this, can you do this on your own? I'm not wasting my time on that. I have the solution right here. So that turns out to be 4.252 years. All right. I believe you're all done writing this, friends. So once you get the duration, what is the next thing to be done? 4.252 divided by 1 plus 10%. That will give you the yield. All right. So here the yield will turn out to be 3.865%. So what is the logic of this yield of 3.8? Sorry, not yield, volatility. Volatility will be how much? 3.865%. Right. So what this means is that if there is 1% increase in the yield, price will fall by 3.865%. Similarly, if there is 1% decrease in the yield, what does it mean? Price will go up by how much percentage? 3.865 percentage. So understand the logic of this one, friends. After that, I will go and explain to you the logic of convexity. I believe you're all clear with this. Now I will explain to you the logic of convexity. All right. Friends, the logic goes like this. If suppose the yield, what is the yield right now? 10%. And what is the price that we are having right now? I think we're getting the price as 9421.5, correct? If the yield goes up to 11%, it goes up by 1%, what should ideally happen to the price? 9421.5 minus the price should fall down minus 3.865%. It should fall down to 9057 approximately. If it goes up to 12 percentage, again it should fall by 3.865%. That is 8707. Again, if it's going to 13 percentage, it should be this minus 3.865%. That is 8 and so on. Friends, if you put this in a graph, it will come like this: 9421, 9057, 8707, 8370, etc. So what volatility says is that the price is going to fall in a straight manner. But friends, when you use the table, year, cash flow, discount factor, and you take a present value. Okay, for example, if I'm taking it for 11%, I'll show you with a simple example of 11% year, cash flow, discount factor, discounted cash flow. Year 1 to 5, what is the cash flow I'm having? 850, right? At the end of year 5, I'm having 10,000. Let us take 11% now. So 3, 4, 5. So I think if I take that, the discount factor should be 3.41. Please confirm it's right, friends. I'm using a new calculator. I might go wrong. 3, 4, 5. Fifth year is going to be 0.593. Please confirm that 3.41 is the right discount factor, friends. Please confirm that and get back to me. I need to get used to this calculator to understand. 5930. Is that right? Yeah. Okay. 2898. 2898.5. So you get the number as 8828.5. So friends, if you look at this, I am getting 8828. But actually over here, what is the number I'm supposed to get? 9057. But what is the answer I got? 8828. You want to do a double check here? Just please confirm the discount factor, friends. 3.695, is it? Something wrong with the calculator, friends. I need to cross check. Thank you for correcting me there. So let me just change it. 3.695. So you get the number as 3140 plus 5930 will be around 9071. Correct? All right. So see, I should have got 9057, but actually what is the number I got over here? I got the number as 9071. So do you see there is a difference over here? Correct? So they say that the graph will not be exactly a straight line. The actual graph will come like this. And this graph is what they call it as convexity of the bond. I'll give you a minute to absorb this part. Okay. All right, friends. I believe you are all clear with this part now. Now we will go to the part of convexity, which I haven't done in my regular classes. So please interact with me now. I'll show you the solution and we'll discuss it together. All right. All right. So friends, here, what we are going to do is we have taken the volatility. Convexity can be found out using a formula C into delta y square into 100. C again has a formula V plus V minus 2V0 divided by 2V0 delta y whole square. Beautiful formula. Logic, I'll tell you in a simple manner. Okay. See, ideally at 10%, just put the price. There is a 2% change in the volatility is what they have talked about. 8%, 10%. 10% the price is said to be how much? 9431 is what they have got. I got 9421.5. That's a rounding off difference. You don't have to worry about that from the exam point of view. Okay. 8% is showing somewhere around 10,204 and 12% is showing 8733.4. Ideally, friends, if the percentage change from 10 to 8 and 10 to 12 are exactly the same, the net differential should be 0. Am I right? So what formula they have used is they have taken, this is called as V plus, this is called as V minus, and this is called as V0. So the formula is now 10,204 plus 8733, okay, minus 9431.5 multiplied by 2. Ideally, if this is 0, means your volatility formula is correct. But unfortunately, volatility formula is not correct. Because of that, you will get some number over here. And the number that you get over here is 74.45. So there is a deviation of 74.45 that is happening over here. Everybody clear? Then this 74, I need to convert into a percentage to understand that if the volatility is this much, how much is the convexity? For that, what we do is we divide 9431 is the price. On the numerator, I have taken 9431 into 2, correct? So it's basically I'm taking the deviation, correct? So to find a percentage, I will denominator also I'll take 9431 into 2. But one thing what I will do is what is the change in the percentage we are taking over here? 2%. So here it will be 0.02 square. So when you do 9431 into 2, total value is 18,862. This multiplied by 2%, again multiplied by 2%, I'll get the denominator as 7.54. So when I do this, I get the answer as 9.867. This is the adjustment factor. I will take this 9.867 now, okay, multiply with 0.02 square. See, here it was a denominator. Then when I did over here, I multiplied this again with 0.02 square. So ideally what happens, this and this gets nullified. It doesn't stay there itself. Into 100 is giving you the exact percentage. Or in other words, ideally if you remove this, it will be 74.47. 74.47 divided by 9431 into 2. How much is 9431 into 2? 18,862. You get the answer as 0.3948 percentage. Or what this means is that, okay, how much is the volatility that we have told over here, friends? How much is the volatility? Is it turning out to be 3.865%? If volatility is 3.865%, this is what we will now call it as theoretical volatility. Whereas the actual volatility can be plus 0.39% or it can be minus 0.39%. This will be your actual volatility after considering what? Convexity of the bond. So 3.865 plus 0.39 will be 4.255 and 3.865 minus 0.39 would be 3.475. So the actual volatility will actually range from 3.47% to sometimes 4.25%. This is the logic of convexity. All right, everybody clear with this part now? All right, friends, please go through this. We can actually cut short the formula. We really don't need a 0.02 square here. Directly you divide by this and you will get the answer. That is because that is taken as the base. I'll write down with the reading pen. Okay, this is the base and the same base is actually turning out to be your denominator also. Are you all clear with this part now, friends? Anybody using a Casio DJ240D? Just tell me how to take the present value here. Something is going wrong. I used to do it earlier, but now when I'm doing, I'm not getting the right answer. So please help me with the calculations, okay? Something wrong with my calculator. I'm unable to. If I have a backup calculator here. Yes, I have one. Okay, I have one. Let's hope this works properly. Okay, friends, I believe you're all done writing this. Okay, so we are done with the concept of convexity of the bond also. Everybody clear with this part? Okay, can I go to the next question now? Next question is this one, friends. Sorry. Just go through this question. This question I'm not doing in class. It's a very tricky question which I want you to do it as homework. I'll explain the whole logic to you because we have done this already in class. Are you familiar with this question, friends? Dividend plan, bonus plan. I'll just show you. This question is already done in class. It is done over here. We'll take mutual funds. Examination question. Friends, we have covered the best questions in the class so that one day before the exam, just work out my material. You will be able to cover maximum difficult questions in minimum time. See this question. Okay. Dividend ratio is given, bonus ratio is given. The only difference is that this question we have done, but in this question they are telling that 2 lakh was invested when the NAV was 38.2 and 35.6. So in this question that we have done in class, they have given the NAV 38.2, 35.6. The question which came in November 2020, they did not provide this data. And they asked you to do a backward working to find out this NAV. Are you clear with that? So what they are going to do here is, if you look at the question, see, they have given this as question mark. So the base NAV they have not given. But they have told that this fellow is investing how much money, that they are telling it down. Investment details are given over here. Profits are given over here. And here they have given the average yield also. So what we have to do is we have to do a backward working. Now, for example, I will take dividend plan. That is the first one, right? I'll just show you how to crack the dividend plan. All right. So in dividend plan, what they have done is investment is 9,20,000. Investment is equal to 9,20,000. Everybody clear? And what is the profit that they have told over here? That is the average profit. Okay. So I think how many years are there? 15 to 20 is 5 years. 27,748 multiplied by 5. 1,38,740. All right. So if that is the investment, how much will be your closing value? This plus 9,20,000. You get the answer as 10,58,740. Correct. This is the amount based on the closing NAV. What is the closing NAV over here? 49. If I divide it by 49, I will get the closing number of units, 21,606 units. Let's go and cross check that, friends. Let's come down. Volatility, we are done. Investment, average annual gain. Oh, they have taken 27,748. Yes, into this plus this 21,607. Exactly the same number of units. So once you get the number of units at the last date, you have to draw the same table, but now you have to do a reverse working to get the number of units at the beginning. Are you all clear with this part now, friends? Okay. So based on that, you can always work it out. Second question, they have given the average yield. So they have taken the total yield for the 5 years, and same way they have done a backward working. So friends, this question is already done in class. Hence, I don't want to again do this question right now in the success series. But please work out this question because it is a very good question. A slightly different question, because where what I did in class, we had the question, we found the answer. In this case, they're giving the answer, they're doing a backward working, and they're finding the question. I hope you're clear with this, friends. Can I go to the next part now? 1 minute time, please go through this. Dividend plan. It's doing a backward working. 31.3, they take the units, rate, unit value, dividend, NAV, new units. Like that, reverse, they go and they come to the opening number of units, and then they divide to get this 46. 1 minute time, just revise this part, then we go to the next question. Friends, I'll just get some water and come back. Just revise this. 1 minute time, okay? Friends, I'm back. Ashish, what is 9071.51? Sorry, I'm reading that now, so I didn't follow that part. Okay. Anyways, I believe you're clear with this. You have one more beautiful question in November 2020 on VAR, value at risk. Friends, first quickly let me explain the concept of value at risk. Okay. VAR tells you how much is the maximum loss, how much is the maximum loss in one day. That is what you call it as value at risk. It is done using this normal distribution curve. Its logic again I have explained in my class, friends, and I think there's a free concept video also available. Friends, logic videos, if you want, you can always visit here and you can view it. Where to come and show you? Just click on my website, come to tarunjagdish.com, click on important content. All right. If you click here, SFM concept videos, just click on this and all the logic videos will flow out. Okay. Logic of yield to maturity, average duration, forward rate. So friends, if you really want to understand and study the logic, these videos are very, very useful, friends. Okay. Can I go to the next part now? Okay. This question, we'll write down the basic data. Working note number 1, basic data. On Tuesday morning, an investor, while going through his bank statement, observed that how much is the fund balance available with him? Balance amount is around 7 lakhs. All right. And the amount is also available until Tuesday till Friday. So, number of days that amount is available, 4 days. Okay. The bank requires a minimum balance. How much banks requires? Minimum balance 1000. So, amount available for investment. Everyone tell me, friends, how much will be the amount available for investment? Do you get the answer as 6,99,000? Correct? All right, 6,99,000. Then if I come down, investor desires to make maximum possible investment where value of risk should not exceed the balance lying in the bank account. Standard deviation 1.5%. And they have also given the confidence level as how much, friends? 99 percentage. Everybody clear so far? Friends, so basically, okay, what they are trying to say, 1 minute, you write down the basic data, understand this question. Fine, friends. I believe you are all done with this part. So, friends, maximum how much loss is it possible in 4 days? He can make a maximum loss of 6,99,000. So, I'll write down over here. Maximum loss in 4 days should be 6,99,000. Okay. So, basically, the formula is going to be loss in 1 day multiplied by square root of 4. Friends, if you remember the concept of VAR, maximum loss in 10 days, we multiply with square root of 10. This should be equal to 6,99,000. Am I right? So, square root of 4 is 2. 6,99,000 divided by 2 will give you the answer as loss in 1 day should be a maximum of 3,49,400. Okay. So in other words, if I just put in the other page, okay, Z is equal to X minus X bar divided by standard deviation. Here they have told 99% confidence, right? They must have given a table. 99% confidence, the value would be, 1 minute. See, 0.9901. So 99% confidence, the value is going to be 2.33. So the table value will be 2.33 minus negative. Loss means negative. This should be equal to X minus X bar is the maximum loss. That is equal to how much? 3,49,500 divided by, okay, divided by what is the standard deviation they have told over here? 1.5%, right? So that will be some value of the portfolio which they is investing into the security, or sorry, it will be X bar. That is the average money that is investing. On this average money, it should be how much percentage? 1.5%. If I do a reverse working, it will be this divided by 2.33. X bar into 1.5% will be equal to 1,50,000. Okay. So X bar will be equal to, I think I've made some mistake over here, friends. Give me one moment. I think I've made some small blunder. Just give me one moment to cross check. We got 3,49,000. Yes, I got 1,50,000 also. So it is X is the maximum loss in a day. The price that it falls down, that is, I got this 1,50,000. It should be divided by 1.5%. Okay, friends, I think I took it as minus. They have taken it as plus 2.33. Let me just work it out based on that. So it will be 2.33 is equal to 3,49,500 divided by X into 1.5%. All right. So if I do it the other way, it will be X bar into 1.5% will be equal to 3,49,500 divided by 2.33. That is 1,50,000. Okay. Divided by 1.5%. So the amount that you can take an investment over here turns out to be how much? It turns out to be 100 lakhs. Is everybody clear with this part now, friends? Maximum possible investment will be 100 lakhs. Just write down this in your books now. Yes, yes, friends. Actually, it should be minus 2.33 is equal to minus 3 lakh 40. That's where I went wrong. It should be minus because maximum loss, right? So once you make a loss, X minus X bar will give you a negative value. Correct? So that's where I went wrong. So here it will become plus 1,50,000. Therefore, X bar will be 1,50,000 divided by 1.5%. That is 100 lakhs. Sorry, friends, I made a small mistake. I forgot to take minus over here. That is the reason that answer slightly went wrong. I'll give you a minute's time. Write down this, understand this. If you have any doubts, please let me know. Start from here. All right, friends. I believe you're all clear with this part. Now, friends, one other question which is an important question for the exam. I'll just discuss that here, but it's already done in the class, so I'm not doing it right now. It's a study material question from the chapter of security analysis, security valuation. Okay. And finally May 22 RTP has got 2 questions that we will do it. Okay. I'll just take that now. Hold on. Uh, Study material, final, SFM, security valuation chapter. There's a question on capital structure of something. Yes, this question. This is question number 7, friends. Capital structure. This question of Sun Limited. Okay. It's a little tricky, but it's already done in class, but mark it as an important question from the exam perspective. All right. It's a tricky question which has a possibility of being asked in the exam. Now, friends, finally, we will go to May 22 RTP and we'll do that now. Wait, I'll just. There are 2 questions on international finance. Very good questions, which has a chance of coming in the exam also. What are we taking? RTP, May 22 RTP, and November. We'll discuss these 2 and we'll finish it off today, friends. Okay. Friends, now if you look at this, okay, May 22 RTP. First question is a very, very good question, friends. It is a question on stock lending scheme, already done in class, hence I'm not doing it again, but a very good question, tricky question for the upcoming examination. All right. First time they are asking stock lending scheme in the RTP, never tested in the exam. First time a question is there in your SFM syllabus on stock lending scheme. So mark it as important. If you have attended my class, already this is covered. If you have not attended my class, please do this question on your own. All right. Here I am doing only those questions which I haven't done in my regular classes. All right. Now next one. Question number 2 is a very simple question. Face value, coupon rate, volatility, etc. All this we have done. Portfolio management also very, very simple question on overall beta. Conceptually very easy. We have done better questions than this in class. Question number 4 is a question on portfolio X and Y. Okay. So combined return, 50% in X and Y, combined risk using Markowitz method you can do, matrix method also you can do. Already done many similar questions in class. Question number 5, another good question for November exam, dividend equalization, but already done in class, hence I'm not doing here. So in this RTP, point 1, 5, mark it as important questions. Okay, 1 and 5. They are dividend equalization. Logic, if you don't know the logic, you can just visit my YouTube channel. The logic is available there. I've taken a video on the logic long back. I'll just show you. You just search Tarun Jagdish dividend equalization. It should come. Let's check. Yes. The logic of dividend equalization. Just click on this video. It's all given over here. All right, friends. Next one. 5 is done in class. 6 is a very simple question on call option, put option, friends. Right to buy, right to sell. So you have to draw the table S1, E1, GP, premium, net profit. Very simple. I'm not doing this also. 7. Another good question for November exam. Already done in class. BSE index, 50 lakh, 50,000, RF, dividend yield, etc. This question is already done in class. Not doing it here, but important. So question 1 is important. 5 is important. 7 is important. All right. 7. 8 is what I want to do in class. This is a very good question. I'll give you a minute's time. Please go through this question now. All right. I'll now write down the basic data here, friends. Sorry. Working note number 1, basic data. Here, a US investor is investing in India. Okay. And the amount, the size of investment is how much, friends? Can you tell me? It is 20 lakh dollars. Okay. Point number B, what is the spot rate that is told over here? How much is the spot rate? 42.5 hyphen 6. That is 1 year ago. So they have invested 1 year back. Okay. And then spot rate now. How much is the spot rate now? 43.85 slash 90. This is the rate now. Down they have told, okay, 1 year back the Sensex was 3256. Sensex 1 year ago. How much is that? 3256. Next one. Sensex now. What is the Sensex that you have it now? 3765. Okay. Inflation in India, I'll call it as inflation in US will be IF. In IF is 5%. Last one. IH is turning out to be how much? 9%. This is the basic data, friend. Write down this. All right, friends. Can I go to the next part now? Okay. So these are the data given. First requirement in the question is find out the nominal return or money return. Nominal return to the investor. Let us do that. Point number A, I will take P0. P0 will be 20 lakh dollar is invested in India today, right? Will you take the bid rate or the ask rate? He will bring 20 lakh dollar to India. He will sell the dollar to the bank. Bank is buying dollar. What rate is applicable? Bid rate is applicable. So what is the bid rate, friends? 42.5. So do you get the answer as 850 lakh rupees over here? Correct. At the end of 1 year, what will happen? 850 lakh he has invested at the closing Sensex of 3256. Now the Sensex is 3765 divided by 3256. 3256. So this into 3765 divided by 3256, if you do, you'll get the answer as 982.87 lakh rupees. Now what will he do? He will give the rupee, take back dollar. Bid rate or ask rate? So P1 in dollar. Ask rate will be applicable. 982.87 lakh rupees divided by what is the ask rate given in the question? 40, today's ask rate is 43.90, correct? I think you'll get the answer as 22 lakh 38,901.5 dollar. Okay. What was your P0 in dollar? That was 20 lakh dollar. So friends, what is the return that you get over here? That will be this divided by 20 lakh. Do you get the answer as 11.95%? Can you write down till here in your books now? I believe you are clear with the first requirement, friends. I will now go to the next one. Compute the real depreciation or appreciation of rupee. I'll write down the next one. Real appreciation or depreciation of rupee. All right. Friends, what is the spot price 1 year ago? Okay. I'll put the bid rate here and I will put the ask rate over here. So 1 year back, what was the rate? 42.5, 42.6. Correct? Okay. Point number B, I will write down. Spot rate today after considering inflation. So after considering inflation, it is 43.85, 43.90. So I'll call this as the money exchange rate or a money cash flow. Correct? I'll just put the word money cash flow. That will be easier for you to understand. Money cash flow. From this money cash flow, hold on, friends. I think I missed the chat. Yes. Ashok, I missed your message. What is G? Where did I use G? IH. Inflation in the home country. Is that what you meant, Ashok? Then you get the real cash flow. How will I get the real cash flow? I'll use the equation 1 plus IH. So 1 plus IH is 9%. 1 plus 9% divided by 1 plus 5% is equal to forward, that is 43.85 divided by spot. So here basically what I'll do, by keeping this equation, I can wash out the inflation. So this, if I do a cross multiplication into 1.05 divided by 1.09, okay, wait, I think I have to take the spot up, bring that down. So 43.85 divided by, yeah, correct, divided by 1.09 into 1.05. I'll get the answer as 42.24. Same way here, what will be the equation? 1 plus 9% divided by 1 plus 5% is equal to 43.90 divided by spot. 9 into 1.05 divided by 1.09. You'll get the number as 42.28. So friends, from 42.5, it has actually fallen down to how much? 42.24. Dollar has depreciated, rupee has appreciated. So friends, what are they exactly asking over here, friends? Are they asking for appreciation or depreciation? Let's go and check it. They're asking for rupee. So friends, here what will happen? It is an appreciation of rupee. Appreciation is always taken as plus. So the formula would be 43.85 minus 42.24, or sorry, not 43.85. It is going to be 42.50, 42.50 minus 42.24 divided by 42.24. Always that will be the base, correct? You get the answer as how much? You get the answer as 0.62 percentage approximately, correct? And the other one, what is the answer you get? Other one would be same way, 42.6, 42.6 minus 42.28 divided by 42.28. It will be around 0.75 percentage. I'll give you a minute. Please write down this in your books. All right, friends, I believe you are all done writing this. I will now go to the next part. Okay. So after we are done with this one particular point, oh, one moment. Yes. After we are done with this part, let me go to the next one. What should be the exchange rate if the purchasing power parity theory holds good? So I'll write down exchange rate if PPPT holds good. I'll draw a table again, particulars. You will have bid rate and you will have ask rate. Am I right? Okay. So I'll write down over here point number A. All right. That will turn out to be spot rate 1 year ago. Everyone tell me what is the spot rate 1 year ago? That is 42.5, 42.6. Spot rate 1 year ago. All right. Now, if that is the case, we have IH and everything, right? So I'll use the equation 1 plus 9% divided by 1 plus 5% is equal to F divided by 42.5. So 42.5 into 1.09 divided by 1.05. You should get the answer as 44.11. Everybody clear? Or 12. And the other one would be 1 plus 9% divided by 1 plus 5% is equal to F divided by 42.6. You get the answer as 44.22. I'll give you a minute's time. Can you write down this in your books now? All right, friends. I believe you're all done writing this, friends. Can I go to the next part now? Okay. Last one. What is the last requirement over here? What will be the real return to the Indian investor in Sensex? That is pretty easy. Real investor will get how much money we have to check. So that as a real investor, he will get whatever returns the Sensex is giving. So that will be 3765 minus 3256 divided by the base is 3256. So do you get the answer as 15.63%? Okay. So friends, we are done with this answer. One clarification. Friends, this answer is not correct in your RTP. They have taken the denominator as 42.5, whereas that is not correct. The denominator has to be 42.24 only. It has been already explained in the class also, and that is the logic. But when they did it over here, they have taken that wrongly as 42.5. Please ignore that part. Okay. Now, so we are done with this question also. Can we go to the last question to be done today? Question number 9 is the last question we will do, and then we will discuss November 22 RTP. But since it's already covered, you will understand when I show you the November 22 RTP that we have done it thoroughly and nothing is left for you to do. Okay. Mr. Maman, Indian investor, is investing in bonds in US. So this guy is in India and he's investing in US. Working note 1, basic data. All right. So what happens is price 0 is given as $100. Price 1 is given as $103. D1 is given as how much dollar? $3 extra. Okay, that is not D1. Basically, it's a coupon rate. Coupon rate is 3%. So that is, I'll call it as coupon. C1. Okay. Now, friends, if I want to find out dollar return, it is very, very easy. Dollar return is 103 minus 100 plus 3 divided by 100. So do you get the answer as 6%? Okay. The first question is, if USD is flat, the problem over here, the main issue over here is that they have not given an exchange rate. So if they have not given an exchange rate, we can assume. So let us assume the exchange rate is, let us take it as 80 rupees per dollar. Because I think right now the rate is around 78, right? You want to confirm? USD INR rate. It is 81 rupees. Amazing. The dollars are going on increasing. I'll take it as 80 rupees over here. Okay. Now, if the USD is flat, flat means my spot rate is also 80 rupees per dollar. S1 is also 80 rupees per dollar. So the formula would be $103 into 80 plus $3 into 80 minus $100 into 80 whole divided by $100 into 80. You will get the same 6% as the answer, friends. Are you clear with the first part? Let's go to the second requirement now. Dollar appreciates by 3%. Dollar appreciates by how much percentage? 3%. Now the commodity is dollar, friends. It's easy. I'll show you how it will work out. Dollar is 80 right now. 80 plus 3% will be how much? 82.4. So it will be $103 into 82.4 plus $3 into 82.4 minus $100 into what? 80 whole divided by $100 into 80. All right. So friends, when you work out this, you will be getting the answer as 9.18%. You can work it out with your calculator. 9.18%. Everybody clear with this part? Okay. Now, what's the next thing? Dollar depreciates by 3%. Dollar depreciates by 3%. All right. So here what will happen if it's 80 minus 3%, it will be 77.6. So in the end, you have $103 plus $3, right? We'll take it together. It will be easy to complete into 77.6 minus $100 into 80 whole divided by $100 into 80. If I do it this way, 106 into 77.6 minus 8,000 divided by 8,000, I'll get the answer as how much percentage? 2.82 percentage. Now, friends, the next one is tricky, and the next one is again where your institute has made a mistake in the formula, what they have done. Final answer will get the same, but they have not done it correctly. They are now saying rupee appreciates by 5%. Rupee appreciates by 5%. Friends, this can be done in two methods. Okay, so that will give you confidence that what we are doing is right. Method 1. What is the spot rate that I told you? Spot rate is 80 rupees per dollar. Now, what is the commodity? Dollar. You convert this into the other way. Okay, so you do 1 by 80. What is the answer you'll get over here? 0.0125 dollar bar rupee. Then they are saying that rupee is appreciating by how much percentage? 5%. So it will be B plus 5%. Plus 5%. So you'll get the answer as 0.013125 dollar bar rupee. Now you reconvert. This is one method to prove to you what we are doing is right. 1 divided by 0.013125. We'll get the number as 76.19 rupees per dollar. Everybody clear? This is ideally the new exchange rate. So the formula would be 106 into 76.19 minus 8,000 divided by 8,000. Just do and tell me what answer you get. Do you get the answer as 0.95 something percentage over here, friends? Just confirm. $106 into 76.19. Yeah, minus 8,000 divided by 8,000 percentage. Yes. The same answer I can also derive in a different manner, friends. The different manner is spot rate is 80 rupees per dollar. Hold on. Yes, when rupee appreciates, what will happen to the dollar? The dollar will depreciate. Am I right? Rupee appreciates, dollar will depreciate. Correct. We have done it correctly only. So S1 will be X. All right. So now what happens is over here, it is X rupee per dollar. Now what happens to dollar? Dollar depreciates, rupee appreciates. Appreciate means plus. So basically what happens is here, the exchange rate that I will get over here would be the new number. It will be 80 minus X, whatever is the price, because dollar is depreciating, divided by X. This should be equal to how much percentage? 5%. So in other words, 80 minus X is equal to 0.05X. Therefore, 80 will be equal to 1.05X. So 80 divided by 1.05, if you do X, you will get the answer as same 76.19. Is this the same answer you got over here also, friends? Hence proven that this is the right method. But the textbook in RTP, they have not done it correctly. They are getting the appreciation as 0.7%. You can ignore that if that answer is not right. What they have done is they have directly taken 95% of 80. They have done 80 into 0.95. 76 they have taken, that is incorrect. All right. So please go through this also, friends. Yes. So we are done with this part also. Last one. Will your answer differ if Mr. Mammen invests in bond just before the interest is payable? It will not change whether you do before or at the time the overall returns will remain the same because interest will anyways be a return that you are going to get in your hands. Am I right? So that will not change. Friends, we are done with this question also. Question number 10, a very good question on GDR, already done in class, hence I am not doing it over here again. Okay. Question number 11 is a question on cap collar floor. Very easy theory question. We have done tougher question in class. You can just read through it on your own. Herbal box. This question we have already done in our class. Additional questions, EVA. Mergers and acquisition, BS. Exactly same type question we have done in class. Mark limited, mask limited. Already done in class, friends. Theory also I covered. Unrelated companies is called as a conglomerate merger. We have learned that. This is a different theory, not from your textbook. Project cash flow, parent cash flow. You can just read through this on your own. So with this, we are done with May 22 RTP, friends. Now let's quickly check the November 22 RTP and pack up today's live session, friends. November 22. Okay. Look at this. Rahul has surplus cash 100 lakhs. Buyback question. Have we not done this question in class? Dividend policy. We have already done this. Okay. Question number 2. Bond refunding question. 300 million, 12% bond. Old bond, new bond. Already done. Third question is a question on CAPM. RF plus beta into RM minus RF. We have done. Question number 4. 22%, 40%. This question we have done in portfolio management. Same numbers. Beta 0.6, 1.24. Go and check it. Exactly the same thing we have done in class. Question 5, mutual funds. 20 lakh, 10 rupee per unit. Relevant expense 12 lakhs. The first NAV question in the chapter of mutual funds. Same thing is already done. Dayal, very good question for the upcoming exam. The perfect hedging question we have already done in class, and there's also a YouTube video on this in my YouTube channel. So if any one of you have not attended my class, I'll just show you that. I'll just quickly take YouTube channel and show you. Tarun Jagdish. I think I'll search for options. I should be getting it. Not coming like this, friends. I think I'll have to go to the videos and search for it. Can take my channel, can click on videos and go down. This is one of the first videos I've taken in a very different technology called as light board technology. I took that video around 3 years back, but a very, very good question even today for them to test in the exam. Hold on. So many videos are there, friends. Yeah, this one. How to create a perfect hedge in the call option. This question, full numbers are explained in hardly 3 minutes of time. You can just go through this video on your own. All right, friends. Let me go to the next RTP question. Dayal. Question number 7 is a question on Nifty hedging. Perfect hedging. S0 into beta into 100%. Already done. Similar type. This question you can all do as homework. But already similar type problems are done in class. This question 364897. We have done this in international finance. Exactly the same question we have done. This one, international finance, 2-month swap points are given, 3-month swap points are given. They're asking you to find out 2.5-month swap point. Already done in class. This is the only question we have not done. Okay. So this question and this question I will go live on a different day and I will do it. These two questions. All right. Where I'll cover the May 22 RTP for all of you. All right. This same question, cap collar floor, interest rate derivatives, same question we have done in class. EVA, exactly the same question we have done. Mergers and acquisition, AFC, BCD, ditto question has come from our material. That's it, friends. Different forms of divestitures, friends, spin-off, sell-off, etc. We have learned that, and this is a general theory. With this, friends, we are done with May 22 RTP, November 22 RTP, and we have covered all the important questions that are applicable to all of you, friends. Please study these questions. Hopefully from these, at least 2 or 3 questions may come in the exam. Even if one comes, that is an added advantage, and that extra 10 or 12 marks can be a very big point for all of you to get through this examination. So shall we pack up our session with this now, friends? So be in touch with me. I will be regularly coming live for SFM Success series. as I told you earlier, just WhatsApp me. I will add you to my broadcast. That way, any of my latest updates you will not miss. If I'm coming live and I'm announcing there is something, the link will be shared directly to your message. All right, friends. Thank you so much. Study well. Do your best. Have a lovely time ahead. Take care. Thank you.